Hello everybody, welcome back to the channel. I have an amazing video for you guys today. I found an article here from the Washington Post with the title, "Can we escape a crash? The housing market is saying yes." Now, you guys are really gonna love this article. If there's anybody out there who is looking to buy a house or sell a house or is in the rental market, you're really gonna wanna pay attention to this article. Now, let me read a little bit of it. Check this out. From stagflation to cost relief in 6 months. That is the new picture of the housing market that has emerged in just a few weeks. And to extent, housing has been a microcosm for the pandemic era economy. The cooldown will present new challenges and opportunities over the next 6 months for both sellers and buyers. It should also provide some broader reassurance. It is possible that we can unwind some of the explosion in housing affordability without crashing the market. Now, this is very important what they just said, right? So, this article is already kind of leaning towards there's going to be a slowdown, but definitely not a crash. When stagflation was the leading dynamic back in March, the housing market story was relentless cost inflation, and the inability for supply chains to catch up to demand is bad. But people still really want to own a home, and low mortgage rates are helping keep that demand strong. Today's story has changed. Supply chains are finally catching up to demand, in large part because higher mortgage rates are making buyers more skittish and damping sales. At the same time, home builders are now in a position to use some of the cushion from record high profit margins to offer incentives to buyers, improving affordability picture for potential homeowners. So this is really important, right? Home builders are taking this advantage because they did make record profits in the last year. Now they could give more, offer more incentives. What does that mean? Maybe, upgrades to a kitchen and things like that, right? So, it makes the house more, more attractive for potential buyers. And, as far as high mortgage rates, obviously, yeah, I agree, definitely is damping down the sales. Now, if we continue reading, because of lower demand is leading to supply chain relief, home builders are in a position to push back on cost increases from suppliers, helping them offset some of the incentives being offered to the buyers. And to the extent slowing cost inflation in the housing market is a bellwether for inflation in the broader economy, there's a prospect that the Federal Reserve becoming more relaxed. Now, this would be pretty amazing. That means that they would lower rates, which will basically turn everything back around, especially in the housing market. That will only allow mortgage rates to fall back somewhat, okay? Helping even more affordability and getting to the housing market to something more like normal growth. Now, this is all what we want, but we don't really know if this is what's going to happen. Remember that this is the editor here saying, how he feels would happen if, inflation starts coming down and whatnot. The first signs that relentless cost inflation was shifting was a drop in single-family housing starting over the past 2 months. Between April and June, single-family starts fell by 16%, and now they're at their lowest level they have been in 2 years. So basically, they're saying, hey, if the housing market, if the people building houses, lower their price, that essentially will help bring down inflation. We'll see how that all pans out. Industry commentary suggested that the downtrend will continue in a short term. In its earnings call on Tuesday, Four Star Group, a residential lot development company, said it believes builders are going to try to right-size their inventory on a project-per-project basis, which is why 4-Star lowered the guidance for a lot of deliveries in the coming quarters. On Thursday, D.R. Horton, the largest home builder in America and 4-Star's main customer, said that it has slowed down the pace of housing starts in this quarter to account for softening buyer interest. Now, we're now seeing the number of single-family homes under construction fall for the first time since the demand surge in 2020. So basically what's happening here is that the builders are kind of slowing down production to kind of keep the inventory low. By keeping the inventory lower, they're going to be able to keep the prices higher. Remember, it's all about supply and demand. For an industry that has been dealing with the rampant cost of inflation due to supply constraints, a reduction in demand from home builders is the quickest way to bring the market back to balance. Lumber has been a well-publicized source of higher costs, and lumber futures have fallen by almost 60% since early March, which will provide builders with some relief over the next couple of quarters. But lumber is just a start. In their June home building survey, Rick Palacios noted that builders in many metro areas were starting to see broad-based cost relief on the materials side while anticipating relief on the labor side. D.R. Horton echoed those sentiments in its earnings call, noting that the labor was an opportunity for cost relief in addition to lumber prices. That is the goal, and we will do as much as we can on the cost side to offset the impact that we see from prices flattening. Article finishes with, the housing affordability crisis of the last couple of years has been a function of three factors: extreme cost pressures that home builders had to absorb, record high home builder profit margins were a function of high demand and low supply, and more recently a surge in mortgage rates engineered by the Federal Reserve. There is now room for all of those to adjust somewhat in the coming months in a healthy way. In response to some of the metro areas will be more balanced than others, but ultimately we're heading towards an outcome of the Federal Reserve wants: a housing market supply chain with little more slack than it has had without any kind of inflation that has destabilized the broader economy. We're gonna just have to see if this pans out. I think that inflation is going to slow down the economy more than this article suggests. But what do you guys think? Do you agree with this article? I mean, they make some good points, but again, I still think that in the next year to 2 years, we are going to have a big housing correction. And mainly because the economy, I predict, most likely is going to take a downturn. So again, I'm not a financial advisor, but I make these videos for fun. And right now is the time to save, because in the next 2 years, I think you're going to have an amazing buying opportunity. And if you're trying to sell a house, this might be the best time to sell a house, because you might not be able to get these prices for, at least the next 5 years. So thank you guys so much for watching. I love you guys. Now, if you guys do like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Thanks again. See you on the next video.